Everyone, by the way, this is Darren Blomquist who works for auction.com. He's the head economist. You also write.
I can go to our what we're expecting in terms of, and this is going out 5 years, so don't hold me to this, but this is kind of some scenarios where in terms of just foreclosure volume that we would expect to see depending on how the economy and housing market plays out over the next few years. But you basically, I mean, hopefully it's pretty intuitive. The green line is kind of status quo. If we just status quo from maybe 23, 24. Not so much status quo as what we've been seeing this year. Just kind of flatlining in terms of foreclosure volume. The yellow is this kind of, I would call it reversion to the mean type of market that we've talked about a little bit here, where there's some kind of sanity restored to the housing market, and you see some slight rise in unemployment as we've started to see some weakness in the unemployment market, in the labor market. So the left side is foreclosure, basically foreclosure inventory overall. That would include pre-foreclosures and all that. The right side is actual completed foreclosure auctions. And right now we're trending to the yellow scenario. The red is more of extreme shock to the economy, probably a 10% cumulative drop in national home prices over a couple of year period. And then we would see more of that up into the right scenario with foreclosure auction volume. But right now we seem to be trending to the yellow. But to just put this in context, if you go back, our line here goes back to 2017. If you went back to 2008, you'd be at a million here.
Yeah.
So we're even with the red scenario,
Yeah.
we're getting back to a 250,000 foreclosure auction volume. Nothing that would shock the market to the extent of what we saw in 2008. But right now we're trending to the yellow. Any thoughts, impressions on this?
I would agree
Pushback?
with you on the yellow. Yeah, I think we're going to track that yellow pretty well. What do you guys think, Michael?
I mean, it's going to be somewhere between yellow and red, in my opinion.
Okay.
I'm with Michael there. I mean, I hope that it's more towards the yellow and not more towards the red, but I think it's probably somewhere between yellow and red.
Why do you say you hope it trends more to the yellow?
I mean, that would probably be better for the overall economy, wouldn't it?
Yeah, I agree. I wanted to get your thoughts on that.
So I think what you got there, Darren, is if it goes red, that's AI eating up a lot of jobs or some catastrophic job loss or something to that effect, right?
Mm-hmm.
Whereas yellow is kind of trending the way we go. AI is going to continue to grow, but it's not going to grow at the rate that people think, and people lose their jobs slower. Plus, people don't take into account that AI, yeah, will take certain jobs, but it's also going to create new opportunities and create new jobs with it too.
Right.
That's why I say we track somewhere along that yellow line.
Yeah. And of course, there could be scenarios, of course, that we're not including in here that could create a brand new line that's higher than the red.
Yeah, black swan events, right? Yeah.
Yeah, the black swan events. I do think, if you have a black swan event, even the red scenario here to a certain extent, the one thing that we saw with the pandemic playbook in terms of mortgage servicing was that the government really stepped in and said, okay, if volume's spiking, we're going to step in and actually do a moratorium, nationwide moratorium, which we'd never really seen before. We had not seen before on foreclosures. So that'd be one kind of twist on the black swan event.
Yeah, I would agree.
At least when it comes to these foreclosures specifically.
Yeah, we've been a managed economy since the 2008 financial crisis. The way they handle money and stuff, it's not the way you and I learn in school about in our economics classes, Darren, right? We didn't learn this.
Right.
This is all new, quantitative easing and then
Right.
manipulating stuff like that. We're in a managed economy, not a free economy. We haven't been in one in a while.
Yeah,
Yeah,
for
they've
sure.
had
Yeah.
quantitative easing since what, 2008?
Yep. Yep.
So that's actually, in my opinion, another reason why the yellow scenario would be good is
Agreed.
because you would see more opportunity,
Right.
but without as much intervention, or without the intervention piece, the managed piece that you're talking about.
Yeah. Yep. We're going to be, well, if you look at it, look at our economy just in general, though, we have 38 trillion in debt, right? Can never repay that. The only way we can repay it is to devalue the dollar, inflate the dollar to be able to pay off the debt down the road. I mean, that's the only way we can inflate our way out of the debt. So pricing and everything should go up. Risk on assets should all go up. Stock market. You saw gold and silver, right? Gold and silver are pretty much a red flag for where things are heading, and they had meteoric rises this year.
Mm-hmm.
Not since 2011 have they jumped up that much. So we're talking 13, 14 years here. And then Bitcoin, of course, right over my shoulder here, but that's going to continue to rise. That's looked at as digital gold. And so that's kind of where we're heading. That's why I think your yellow numbers, right? And things will go up. Pricing at a
Yeah.
house, housing is still going to go up. We're just going to be in an inflationary environment for a period of time here.
Yeah, it really points toward that, which at some point it seems like there would be a
Crisis. There's some crisis that has to happen.
there would be something's got to give and some kind of more extreme correction, but so far we've been able to avoid that for quite some time.
Yeah. Interesting. I love these charts though.
Yeah, thanks. Thanks for the opportunity. And you guys have any